Good morning, Futures family and Team Top Step. It's time for another market prep here, another trading week. Monday, July the 10th. Yes, it is Monday already. Our focus as always is on accurate context, always thinking about risk management and thinking about remaining patient every day. Hope you had a nice weekend. My name is John Hogan. Thanks for trusting me with your time. So as we enter another trading week, we'll take a look at all of the events that are due to come out this week. Starting with today, 9 o'clock, we've got wholesale sales and inventory due out. We have several talking Feds today at 9 o'clock. Bailey and Barr are due to speak. 10 o'clock, Meester and Bailey are due to speak. And then at 11 o'clock, Bostic. All of those talking Feds due to speak today. And that's really the only known information that we've got coming out today. Although, as the week goes on, kind of a thin day tomorrow, a couple of bill announcements and a couple of auctions. Wednesday, though, we've got the CPI number coming out. Lots of speculation, and hedging and positioning is going to go on over the next couple of days, waiting for that information. Of course, we've got the EIA petroleum status report also on Wednesday. Thursday, jobless claims as usual, and then the PPI number comes out. So we are waiting for some inflationary numbers to see what's going on with inflation. PPI final demand on Thursday, and that really kind of rounds out everything. We've got Michigan consumer sentiment on Friday, but I'm looking at the calendar, and on Wednesday at 1 p.m. Central, the Beige Book is coming out. That's always the kind of warning shot across the bow that it's 2 weeks to the next Fed meeting. So we're going to be, of course, seeing what the expectations are looking like as far as what they're going to be doing with rates in a couple of weeks. This morning, we've got stock indices steady to lower, steady to mixed, awaiting some of that new information as far as inflation is concerned. And also on Friday, we're kind of unofficially kicking off the quarter two earnings season with a bunch of major banks reporting on Friday. Crude prices are off last week's highs. Those highs kind of put in because of OPEC, their meeting and their expectation to be cutting some more production in the future here. But a lot of that reason that it's off of that is speculation that China's economy is continuing to slow. And we're, of course, awaiting that inflation information later on this week here in the U.S. Interesting thing, Citibank has downgraded U.S. stocks to neutral from overweight, citing the thought of a potential pullback because the first half of this year, the stocks have done very well. So they're kind of taking a little bit of a cautionary tone in that. And I find myself wishing somebody could downgrade me from overweight. VIX this morning, slightly higher, but lower than it was at this time on Friday. It's 1531 right now. Dollar index also higher slightly this morning at 102.50, where it was 103 on Friday. And the yield on the 10-year continues to slip to the upside. 4.08% last time I checked this morning, where it was 4% at the same time on Friday. So make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome. And make sure you subscribe to our YouTube channel so you can get notifications when we do go live. And as always, it's a pleasure to see everybody. Shaw saying it's Monday already, and yes, it is. Lacey says good morning to everybody as well. We got the rooster crowing early this morning. Oh, Shaw, by the way, winning the prize, being the first one in the room this morning. Dan Trader, yes, went by fast, especially compared to last weekend, right? Caprice Nasdaq. Theo, it's good to see you this morning. Futures trading today, Haggle Matters. Kaylee James and Kaylee's Boo. Something tells me you guys are related or friends or something. Will, good morning. It's good to be back with you, Will. Josiah, good morning. John, Bill, Mackie, First day of combine and in here. Well, it's great to have you with us. We're looking forward to your success. Thanks for stopping in and saying good morning here on the Market Prep. And as always, I mean, our goal here is helping you find that success that you're seeking. So we'll look forward to helping in any way we can. Michael this morning, Sarah Hall, prayers and love to you as well. Grounds Hero, JD, it's good to see you, my friend. Jimmy, we got James here. Good morning. I have not seen any reports of anybody having trouble logging into our trader, but if you are copying and pasting your login credentials, try typing them in, and remember they are case sensitive. DA, good morning. Bear goes long. Yes, find your patience and have a good week, right? Wyatt, our trader's working for him. That's good. Glad to see you, Wyatt. Haggle matters. He's changed this horrible intro. It's early morning. He's trying to get your blood flowing a little bit. James, Rusty Golfer, good to see you. Les, Jay, Lance, good to see you. Good morning. Pete, Travis, Jason, good morning. Mr. Harrison, good to see you. Now I got lost. Where am I? Chris, good morning. Scott Sawney, Concord, George Duque, Nasdaq, Dennis, John, Dr. VJ, Jim, Nikos, David, Savage, or Savage, Fatpan, good afternoon from Saudi Arabia. You're coming from a long way away. It's good to see you. Glad to have you with us. Alfred, Genghis, and Brody. So today is Monday. We will be returning to the schedule. We are having group coaching today at 12:30, and then at 2 o'clock, we will be having Make Hogue Money. These are new links for those. Got them now in the chat. Bookmark those, whatever. They should last till through the end of the year. So again, we've got group coaching this morning, Make Hogue Money after that at 2 o'clock, the afternoon session. We'll see if there's anything to do. Okay. One other thing. I've been kind of, and I'm sure we all have been kind of keeping track of the saga of Twitter and Threads. Apparently, Threads has cleared 100 million users already. I don't really do social media much, so I'm not really on it, just kind of keeping an eye on this whole soap opera that's going on between those two companies. All right, speaking of soap operas, what are we looking at in the markets this morning? This is the daily chart in the S&Ps. What do you see when you look at this? What do you see maybe if you look at the weekly? Hang on. What do you see when you look at the weekly chart? Here's the weekly chart. I see 4 weeks of range-bound activity. The market state, the structure is still good to the upside, but we're seeing the market, here's back to the daily, pretty much range-bound activity for the last, month, right? And we're very centrally located inside of it. This market is seeking new information. I don't know if it's going to stay range bound into the FOMC meeting, which is in a little over 2 weeks, but it is possible. Markets can stay range bound for as long as they want. Open interest was lower on Friday. It was also, I believe, lower on Thursday. So this pullback and the attempt to move price lower has been relatively unsuccessful. Remember, what we're always thinking about is what is the market attempting to do and how good of a job is it doing getting there? And it doesn't seem like it's doing a very good job on the downside. Volume's been okay, but it's been losing open interest. So you're kind of looking for opportunities in the longer time frame to find an opportunity to buy this market when it shows weakness. Uh, it is, again, seeking new information. We'll take a look at the 30-minute chart now. So think about Thursday, big down day. We pulled out of it. Friday, big up day. There wasn't a whole lot of momentum left up here. Volume seemed pretty good up there, but the market kind of turned around and came back lower. We tested below last week's low so far unsuccessfully, looking like we're likely to open with a slight gap to the downside, which does give us a little bit of nuance, a little bit of reference with which to think, we don't see a whole lot of overnight inventory. That's been reconciled. But if we open with a gap and can't close that gap relatively early, we might look for this market to continue lower. If we close the gap, that can be resistance. But if we open with a gap and find acceptance inside value from Friday, that puts forth the value area special situation play, which states reacceptance inside value after opening outside of the previous day's range increases the probability of a move to the other extreme of value at some point during that session. So if we do find, and it's very subjective, that price is reaccepting inside value, that kind of takes the opportunity for shorts out, and we maybe should start be looking at the value area special situation play, which again states probabilities are that price can return to the high of the other extreme of value after opening out of range. It's always a tricky play. They never make it easy, but when is trading ever easy? So it's all about your ability to kind of mark acceptance back inside value from yesterday. If we never return to the range, then we know what we have to do. We're either going to look to range here or continue lower. If we reaccept inside value, the move would be to the upside. Here's the TPO chart. Week high. It's kind of an unfinished upside auction. Didn't spend a lot of time up there, however. We have an attempt at a late spike at the end of the day. It didn't close in the late spike, but still kind of looking a little bit ominous. And then opening in or below it puts us kind of at accepting lower pricing. So this little late spike here that isn't a true late spike is really up against the value area, which would bring us higher. So this whole area, our current pricing that we're at right now, looks like a very important level in the day time frame. For me right now, it's going to be an interesting open. We've got a relatively organized rally up to this point. We did take out this naked point of control on Thursday. We've got a long way to go before we're going to start finding visual targets, which takes us basically down to the weekly kickoff low, which remains at 43.50. Long way to go for that. Do we have the information? Do we have the energy to get down there? I'm probably thinking not until maybe CPI, if something goes haywire with that, but you never know. Anything can happen, ACH. But I'm going to be kind of focusing on this area, especially early in the session. If we open in range, that's going to change things. If we open with a gap, those will be my first two kind of nuances or ruling reasons for taking trades early in the session today. Here's the composite profile. Okay, we are, it was last week or the week before when we tested down to this level here, looked at this as saying, okay, this is pivotal. If we can't move into this, we're going to push higher, which we did. We're kind of close to the point of control. We're kind of, I'm not seeing in the overnight range anything all that important other than the fact that we tested to the point of control. in this composite profile. So as usual on Mondays, I try and start slow. If I get too aggressive too early on Monday, things tend to go a little bit haywire on me. So here is the daily for crude oil. With the OPEC meeting last week, we had a pretty good rally. We've tested to the overnight high. We've tested to last week's high in the overnight, is what I mean to say. It is now also in rollover. It will expire next week. So the longer time frame traders are going to be looking towards moving their contracts from the August contract into the September contract and trying to do so cheaply or in profit. So their focus is going to be more on getting that rollover done than directional activity. They can be forced into directional activity, but it is something that we always try and keep in mind, especially in crude oil and natural gas, because it rolls over every month. It's a pain, but it is a fact. So we lost 10,000 in open interest on this push to the upside. Now, some of that is probably rollover related, but it doesn't bode well for a continuation when we lose volume and lose open interest on a day such as we had on Friday. Take a look at the 30-minute chart. So IB low, did not have that in the S&P. As a matter of fact, 5 of our 7 markets had IB at one extreme or the other. Market opens, looks, opens, tries to drive lower, drives higher. We've got overnight inventory to the short side. We're in range, we're in value. This usually tells me that I'm going to find better trade location as the day goes on and to remain patient. Sometimes it's true, sometimes it doesn't. We can't foretell these things just using probabilities. So we've got a profile that is very P-shaped, which indicates short covering more than new longs. And that short covering is supported by the 10,000 contract drop in open interest. Here's the TPO. Double distribution trend day. We have a late spike, okay, and we've opened below the late spike. So this open that we just had may be indicating that we are trying to reject higher pricing. Weekly kickoff high is 75.70. Here's, I think, yeah. So back to the TPO chart here. So we've opened in range in value below the base of the late spike. This can be telling us that price is being rejected at higher levels. The base of that late spike is 73.46. We're almost to it. It could be an interesting spot for an execution. Again, if only for the fact that it allows you to limit risk. So here's that P shape as well, short covering, and that is supported by the loss in open interest. The auction didn't perform well on Friday. Now that could change. We got a couple of nuances that are saying it's likely to now accept prices lower than this. You get a good look here. We'll come back and take a look at this at the end of the prep because it looks like an interesting situation. Here we are with the Nasdaq. Weekly, it is very much range bound, much like the S&Ps. We won't go and take a look at that. We'll just look at the daily chart here, and we've got some established ranges here, and we're right in the middle of it. I've got weekly kickoff levels kind of creeping up towards price because I'm thinking that there's going to be some sort of change, particularly in the Nasdaq sometime soon. I don't know when, but it seems like the market is coiling up to do something We lost 3,900 in open interest on Friday. We also we gained 1,700 here on Thursday. So the break on in the Nasdaq was had a lot more to it than the S&Ps. The break in the S&Ps felt a little bit empty, and now Thursday is kind of an inside day, so it makes sense that we took a little bit of that open interest off. We tested the weekly kickoff low now this morning prior to the open, seemingly seeing some rejection from that level. Again, what is this market attempting to do? It's not attempting to do much. So we're going to really try and stay patient and look for good trade locations as the day goes on, unless if we open with a gap, that puts the value area special situation play as a possibility. If we open with a gap and can't close the gap, I would certainly look for a test down to weekly kickoff low, last week's low. That would kind of be the first target if I had a winning position on it, if we open with a gap and can't close it. But there's two different stories here. Open with a gap, don't close it, we go lower. Open with a gap, reaccept inside value, we probably might test all the way up to value high from Friday. We've got a naked point of control that remains unchecked down here. Another one down here, which is right by weekly kickoff low. Take a look at the TPO chart. Again, like the S&Ps, a weak high. This is an unfinished upside auction. We also have, excuse me, the appearance of a late spike. We are right at it. So again, this little area right here that we're currently playing in is important. It's important. So, this might force me to become a little bit more aggressive early on a Monday. We'll see. We'll just have to see how this market opens up. Normal variation, neutral stance, weak high, excess low, but possibly looking like a late spike. Open with a gap. We can't close that gap. It's accepting lower pricing. We have to go with that. Everything we think about doing, everything position that we take, it is so important to be thinking about where price has to go to prove you wrong. What is the risk? If the risk is too great, try and get better trade location. If you find a cheap trade, take it. But you always think about risk first. When I put a position on, or I'm thinking about putting a position on, my first thought is, okay, where does price have to go to prove me wrong? If I'm looking at a short down here and price proves me wrong all the way up here, I'm not taking that trade. I'm going to be patient, wait to see if price gives me an opportunity where I can afford that trade. If not, then I'll be patient, wait for something else to come to me. But I don't want to go chasing trades, don't want to go looking for trades. Be patient. Opportunities are coming all day long, all day long. What about gold now? Range bound, remains range bound. Short time frame control. We added 3,200 in open interest on Friday, which that's okay. Volume was off a little bit, but you can just see the extremes of this range that we're in. So what do we do with this? Well, I avoid the middle and I look to the extremes for my opportunities. If we remain range bound for a long period of time, every time we get up near the high, I look for opportunities to short using the breakout level, which right now is weekly kickoff high and low, for risk management. I know I can trade cheaply at those extremes, selling it at the upper extreme, buying it at the lower extreme, selling it at the upper extreme, buying it at the lower extreme. You can print money, but we only do that until there's an acceptance outside of balance, in which case then we have to go with it. But right now, we're right in the middle. I'm really going to try and stay patient. Here's the 30-minute chart. Okay, we've got overnight inventory a little bit too short here. We've got a visual down here we haven't reached. Looks like right now the market is already adjusting or reconciling some of this overnight inventory on the fact that it's pulling off the low and creating what? Perhaps a little bit of structure here that we might be able to lean on if we get back down to that level. What's it look like on the TPO chart? We've got a normal variation day. The lower extreme of the IB is the low of the regular trading hour session. Calling this kind of a neutral stance. Price may start looking for a new area. We've had, a prominent point of control here that it hasn't been able to reach. Stay patient. I could totally see price coming to this point of control and coming to this point of control. Opening between them, it's likely it's going to reach one of them at least. A little bit of possible repair going on here. Here's the euro. Now, here's a balanced breakout example on the 30-minute chart, but it's largely remaining range bound. It's got a bit of a pullback here. We broke out on Friday. The downside structure, however, I still believe remains intact. We lost open interest on this pop here on Friday. That's not necessarily a good thing, but what did it do? If you were looking at this as a bull flag, it broke out and it basically went to almost to the high of the bull flag. So the move kind of played itself out on Friday. Week overnight high, overnight low. What am I looking at here? Here we go. Oh, I'm sorry. I was looking at the wrong thing. We added open interest. So that's a good thing. It's a healthy breakout to the upside because we increased open interest. Volume was okay. Last week's high is going to be pivotal. Take a look at the 30-minute chart. So here was, I'm going to just make this a little bit more time on this. So we were watching this trend line, I think, pretty much from this point on. I know we looked at this on Friday and we opened above it. So acceptance above a balance line or a trend line means you go with it. So this could be very much a kind of considered a degree of balance in a bull flag. When we break out above it, we go with it. So a pretty decent move. It traded right to where? A naked point of control. So now we've got last week's high, our overnight high, pivotal. The market got too short, it reconciled. It got too short, it's starting to reconcile. There's not a lot of oomph so far in this market so far. We've opened in range and in value. Stay patient. I believe better trade locations are likely to come as the day goes on. Here's where we are. It was a triple distribution trend day where we opened at the central distribution. Repair is likely. One or both of these assumed points of control in these distributions of time and volume are likely to be hit. Here's the 10-year. Here's the range bound. It kind of looks like what gold's doing now. And look what happened upon acceptance outside of the balance. The market has been moving steadily lower. We added another 3,000 or 30,000 in open interest after 50,000 open interest on an attempted continuation to the downside. It ended up being an inside day. We've got another inside day. This market is coiling, looking for its next information or its next victim, if you will. So we're going to look at the 30 now. Overnight inventory was a little bit longish. Now it's just flat. I mean, the market is seeking new information. This is the weekly kickoff from last week. I believe the weekly kickoff low when we broke down below it. We've been struggling to hold up anything above it. Form of this gap and this point of control. So there's a little bit of concern of a pullback off this low, but I don't think that that's necessarily a game breaker for the downside. Of course, we got to be watching rates. You know, the speculation is they're going to raise rates in 2 weeks, which should keep kind of price pressure on the 10 years. So here I think we just really want to try and stay patient. You know, last week's weekly kickoff low, resistant. Again, will it be resistant? You know, we're pretty close to some potential repair above here, but watch those rates. Watch those rates. Here's the TPO chart. I'm sorry if the feed is getting blurry. It's very strange. So here's that gap, kind of a poor low here. Friday, an inside day in extended trading hours, but it was overlapping the higher from the previous day. Value was also overlapping the higher, and it's a very prominent point of control. Obviously, this is probably going to be hit relatively quickly. And we just got to see, I think, you know, kind of what happens at value high here. If we start showing signs of acceptance above value high, then we could come up, close the gap, trade to this point of control before possibly returning to the downside. Hang on a second here. Yes, the sound was goofy. I was on the wrong microphone, so I apologize for that. It should sound a lot better now. Yeah, and those gremlins are always around. Always around. We've been looking at the natural gas, and you know, I just don't trade it. I don't think a lot of people are that interested in it or anything. But we'll come back, take a look at it. You know, we've basically kind of come into range here. Last week's high, last week's low. Market is kind of coming off that low. Here's the 30-minute. Settlement was down here, so we're getting a little bit long in overnight inventory. It seems that is likely close to being reconciled here at this point. We added 4,800 in open interest on this move to the downside, and again, even though it's a week later, the expiration it is still coming into rollover. So we will natural gas and Russian roulette, right? So we will look forward to seeing, you know, how these markets play out. I will be looking forward to seeing everybody for group coaching today. Make Hogue money later on. We've got a busy day here at the office, so let's take our deep breath. Stay humble, grateful, creative, and centered in your trading today. It's Monday. Let's try and get off to a good start. We are looking forward to your success. So trade well, get out there and profit, and I'll see you later on today.